Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
All right, greetings everyone. Welcome back to Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht, and together we support clients in our Slack member workspace with everything from macro to micro with a whole trading desk of subject matter experts. And all we're doing here today is trying to make sense of this uncertainty. And I think this is good that we're done Fed Day because it was the most boring hour. I live commentated with nothing to commentate about over Fed FOMC meeting and Powell presser. Really can't get that hour back. So here we are at the end of the day, and we are seeing a little pop in markets. And I just wanted to highlight that real quick because it is supporting Nvidia in particular, but semis in general. It is a story about removing China restrictions. It isn't about removing China restrictions or tariffs, actually, but that is how it's being framed. The Trump administration will rescind the AI diffusion rule, that which was part of the terror of pushing stocks down precipitously before they came out on April 9th and rescinded that, or I should say postponed that. So now Trump is coming out saying the Biden era rule is set to take effect May 15th, which is something else we talked about on one of these sessions where this was already baked in. This is not actually news, but officials, he said, will not enforce it. Sources tell blah, blah, blah. Okay, so rescinding the global chip curbs is very bullish, obviously, semiconductors, and especially after all the drama we had with the Taiwan new dollar this weekend, where it had, in essence, over very few days, ended up being a 15 standard deviation move, 10% in their currency. And part of that was repatriation of dollars back into Taiwan on the potential threat of the semi-tariffs being pulled forward. So Dan Neistat came out. He's a semi-analyst of some notoriety, I would say a lot, actually. And he came out and said Trump actually, it's rumored, will increase the semi-tariffs. So 25 is the minimum, might be as high as 100, and it could be announced as soon as Wednesday. Other sources I had said, no, he's not going to be announcing that on Wednesday. Now he comes out and there is a bid that all of a sudden hit on this headline, and that's what we are, right? Constantly gripped with these headline moves. And last night it was the news that Besant was going to be flying to Switzerland to meet with Chinese trade officials. Although in China, there wasn't any really push about this. They framed it as US keeps begging, so we might as well entertain them. Anyway, it was one of those deals where this is more of a story. It is potentially here about easing restrictions on the Middle East. So again, Saudis have come in and helped Trump and Besant make one of their promises come true, which is falling energy prices. So this is a big deal. Crude has actually crashed through its very strong support in the $65 handle. And then now it is in the 56 area. So part of that was cooperation with OPEC. What was the ask? I wonder if this is part and parcel of some leverage. But anyway, other than that, the market has been a bit of a grind, to say the least. And as we talked last Wednesday, I'm looking for VIX to go into 20, VVIX into about 24, and then base before we have any potential of selling. In a nutshell, not before OPEX, which is the 16th, Memorial Day, which is the 26th, and then we have a Nvidia earnings on the 28th, Wednesday. So basically the end of May. So that's it. That's all I got for right now. A little roundup of market action. Hans, what?
Well, that's it. I think it's become a little bit boring, right? We got the squeeze. Now we're getting a little bit of the we. And MAG finally, we saw the MAG. I've been saving that one for you, Samantha.
I love that.
MAG finally snapped out of its stupor. And we had been talking about, I'm a little bit surprised because I've been a little bit so-so on MAG in general, especially Google, which we'll talk about it at some point. But we had that big move back. We talked about how structurally we had these very large potential tailwinds in the levered ETFs, which tend to focus in on those very popular products, very popular tech, MAG, et cetera. And that probably had an effect on helping to push those stocks up. Decent numbers as well, generally speaking, which I don't think anybody's that surprised about, but markets just needed another reason to go. So when we were at 4,900, the 200-day moving average seemed like a bit of a dream, but that was max pain, and we've gone gone towards that like a magnet. It seemed like this incredible wall. When we were with Brett a couple weeks ago, 2-3 weeks ago, I said, one thing about markets I've learned over the years is that I'm rarely surprised at how amazing they are at climbing that wall of worry. And I said, it's a big wall, but it could happen, especially coming off that existential risk that we experienced. It was palpable, the sense that the markets were being thrown aside. And as soon as that stopped, a lot of it, I think, came out of it because that was the immediate sort of issue underneath our noses. And the secondary issue would have been, how bad are the tariffs going to be? Are we going to see the art of the deal play out? We don't know. So what they did was they bought first and asked questions later, which is, I think, what we've seen. So I think it's a reasonable bounce back, right? It depends. And I'm sure you'll agree, if this goes on for 6 or 8 months, then we have to admit that there's some damage on the economy that's going to be inflicted. So the market, without question, is expensive, but as soon as the glass is half full, then the market starts to absorb these things. Earnings were pretty okay. We talked about some of these mechanical effects from levered ETFs and vol targeting. Talked about vol targeting. Some of these systematic strategies, CTAs, vol targeting, that some of the viewers probably are like, what the heck is that? They're larger than they've ever been. And these are sort of these strategies that just react to either volatility or changes in risk parity type strategies that just react to things. They have no emotion. They're like the Terminator. They just do what they got to do. And vol targeting was tapped out. They had literally sold everything. So they were basically near the lows that we've seen over the years in terms of allocation. And when that happens, there's nothing left to do but start to allocate. So I'll show you guys some charts in a moment, but really it's a market where there's buying on down days, there's buying on neutral days, there's buying on up days from the standpoint of some of these funds. And I think, and then you have this corporate window that's opened again, and there's sort of some optimism that as soon as we see one deal, we may see more deals. They've been very unclear on that, obviously. They've talked about, we're close to a China deal, and then what are you talking about? Nobody's even talking to China. And so there's always obviously a bit of confusion out there, but it's quite possible. I feel like if we do get a deal, and I think there's a pretty good chance of that. I think Trump wants to be a hero of sorts in the end. I think he wants to mix things up and shake things up, but in the end, I think he wants to be liked. He wants to do something for the people, and I'm sorry, and he is a moneymaker, or he wants to make money. So I think he believes in market. And so I think in the end, we are certainly going to see that slowness because of all this pull forward demand. We're going to see some sort of slowness. But the thing is, how will the market perceive that? Will it say 2025 is going to be throwaway? We're going to look to 2026. It is transitory. This is a transitory kind of lull in the economy. And let's look towards tax cut, regulatory tail, all this wonderful stuff that was supposed to come with the Trump bump right off the bat. And then we'll see maybe some of that money that's gone east will start to reconsider and come back. And so I think the stage could be set for something interesting.
I love your optimism.
I am getting glass half full.
All right. I'm going to talk to a little bit of the snark that I feel instantly. I have to get it off my chest. So when you talk about Trump has the best interests, I think he definitely has for his insiders. For example, that Trump coin, 58 wallets have made over $10 million each from President Donald Trump's meme coin, totaling $1.1 billion in profits. Blockchain analytics firm Chain Analysis said 764,000 wallets of mostly small holders have lost money on Trump, according to the firm. So he's still paying his insiders really well. But in the meantime, one of the reasons why I think we have also moved into the higher levels is what I talked about on Monday, which was right here. Feels wrong to be long, and yet talking about your kind of price insensitive buyers of the CTAs and the vol targeting and such, they buying begets buying and selling begets selling. And right now we're still in that positive gamma. But it was really interesting because Brent, speaking of which, was talking about option flow and dealer positioning in his Sunday missive. And it basically said, was that rally all put covering? This is them speaking, right? Signals in their GEX, which we got a show of that a few weeks ago, said if everything, it says yes, it is put covering. Forgive me, I got to read this out in one continuous spread. If everything is in the clear right here, then we should see investors rolling out of puts and into calls, and volatility should contract. Now, they're not talking about the realized volatility that has absolutely been coming down and is still coming down into options expiration next week, both for VIX and for the monthly, which we talked about literally from 22nd, 23rd, which was when we did the macro to micro 2 weeks ago, that this is really part and parcel, right? We start to have that realized volatility fall. Anyway, big picture, if you break down what is supplying the SPY negative gamma, what you find is that it is almost almost 100% from market maker short put positions, which is, we got a graph, but anyway, this means that SPY traders are long puts as their predominant position. So they're still hedged. We haven't really hit that level yet that will force a lot of the unhedged and more of the kind of gamma chasing. In the meantime, I still see this VVIX, we talked about this last week and the week before, still falling into kind of 94 area actually for VVIX and 20 for VIX. And then we'll find out. And yes, all those lovely price insensitive buyers Gallagher talks about and details, but we're still waiting, anticipating something on the peace deal, something on the trade deal, something on the tax cut and debt ceiling deals. And I will warn, that kind of stuff has been pushed out. The GOP is not in consensus on how to deal with Medicare, and they really aren't really in alignment. So that's getting pushed out to probably June. It's not going to make it by Memorial Day weekend, which was the Trump request. So yeah, on the Nvidia question, something else we talked about last week, and since I've got this chart, I might as well put it right here and show that I had talked about these incremental $10 views. Okay, so this is right now after market. We're pushing 117 on that press release that came from Trump, right, regarding AI, and how it's interpreted is bullish. Anyway, I saw that 116, very important to get and stay above this 116 before it can move into and through that trend line, before that trend line can break and it can move into the 200-day, which I hate to take this off. I'm going to take it off so you can see it. See that green? This is another green. That's the 200-day, which is basically that 126 area. So I think we could move up into the 126 area for earnings. And then let's see, I have as my outside price for May 136 post earnings. So that's basically what I've got because I'm not very bullish in Q3. So for right now, Nvidia's 116, 126, 136. I think it's done. To answer your question, what do you think?
I'm starting to warm to Nvidia a little bit. The more when I get around to it, I do a little bit more research on AI, and all the big caps have come out and said, yeah, we're still spending, and it seems like everybody needs like 1 billion GPUs. I don't know why people need so many of these things, but it is what it is. And I think there's probably no question that we're going to, barring any kind of efficiencies that come into that sort of business, we're going to need billions of these GPUs. So I think if you want to bet on one company that's going to take advantage of that, Nvidia is a pretty good one to bet on. So it's not that expensive. I think it's interesting. I prefer it in the 90s, but it was there and I didn't grab it. So I'm starting to warm to it a little bit. It does seem like there's a bit of an overhang to it a little bit. It can't seem to get out of its own way. And we have seen some negatives from a few other companies out there. They may not be as representative of Nvidia totally, but some semiconductor caution out there. And everyone just feels there's got to be some sort of denouement in the demand for semis. And I don't think there necessarily has to be. I think this can keep going for quite a long time. So I think that the demands on, we're seeing power generation companies come back, VST, some of these companies that got pretty hammered in the sell-off as well, seeing some of these things come back. I think if anything, power gen, if we become more efficient on the power side of things, maybe that's an area that may not fully participate at some point. But on the semiconductor side, I think it looks interesting. And again, and McGillicuddy talks about this, how that upside is cheap. So anybody who's played the upside for the last 500 points, they got into it cheap. And I think if you want to continue, I think the pain point still is a little bit up here for some time, because I think into that May expiry, we could just stay bid. Now, I will note that I can think of a few times over the last year when I've said, I think we'll go one more week of buying, and that was it. That was basically my signal to basically get out of positions. So we'll see if that plays out. I think you were looking at some work that somebody had done showing that there's a lot of supply to out to 0DT short-term puts lately. And so from an institutional standpoint, and so what that is, I think we heard a bit of that from Brent as well. And that basically, that's a sort of call that in the short term, we are probably going to remain somewhat bid. That replenishes dealers, they get positive gamma, that creates a little bit of support for markets. But then the question is, what happens after when we get there? That's a bet that things stay quiet for a week and a half. That is not a bet that we stay quiet for the next 3 months. So it's merely a very targeted bet saying we are going to grab some implied volatility. We're going to grab some premium right here and harvest that. And then all bets are off. If we look at the gamma profile, we're shortish all the way along. So there's that accelerated accelerant that we talk about is there. So if we do get that spark, we always need the spark. Gamma doesn't do anything on its own, but we need the spark. And if we do get that spark, it could be a very different reality. We could start to see a lot of volatility again.
So you are being called, okay, this is from T again. He's our comic relief. I'm shorting more into Q2 and Q3, which makes me short Hans, our favorite Canuck. I think we have to get through a really dangerous summer. And this is what right now many are not seeing signs of the supply chain disruptions, and they're not feeling the layoffs because they lag. And Powell was out today talking about we can't be proactive. We have to be reactive. So there's no hard data yet. Jobless claims are still under my threshold of 267,000. The unemployment rate itself is going to be very much in disguise of the actual economic pain that's being felt by small businesses who are absolutely going to suffer as a small and medium as a result of tariffs, especially if they stick. Powell was also saying, hey, if these tariffs stick around, we're not going to be cutting. And they also, by the way, exactly at that moment when we got that news, we had two other things taking place. Deutsche Bank came out and said, we don't see a rate cut until December. And so we haven't priced out the rate cuts that have been priced in for June and so on. The second thing was President Trump and President Xi had some words together, which was Trump said, yeah, I'm not thinking about lowering the tariffs of 145% on China. Now he's saying that 8 minutes before the FOMC statement is released. And he's saying that after Bessent is scheduled to fly to Switzerland to talk de-escalation with China. At the same moment, we got a response from the president of China, who said, I'm looking forward to talking ties and cooperation with Putin. He's in Russia right now. So they're playing this game again. It's little boy game, but on a global stage, right exactly as Powell is about to present at the podium. So we still don't have any resolution. Long story short, he must have said, I don't know, Powell 20 times. So I don't know, I don't know, I don't know. And I love the Apollo quote that I gave yesterday to clients. No vessel will book past July 8th without clear policy guidance. So he's talking about, obviously, the drama that is right now not being priced in to the market, but a very large bet that Citibank and Apollo analysts are making for a summer recession. So we're talking retail reckoning. We're talking a huge hit to logistics, rail, trucking, shipping. There's another very reputed, there are folks that are really on top of this going, the recession is going to start in the LA ports because that's a mammoth entryway for imports that are not going to make their way to the shelves, and customers don't see that yet. And this is something that's not priced in. So I think the market is still pricing in trade deals, tax cut deals, everything getting resolved in the next month or removed in the next month. And basically, I have big doubts about that. But in the meantime, T, you're right. There is still this systematic mechanical buying, and we've got puts that are covering, but they're still hedged. If we were to get over, I think 57.50, we'd start to see a gamma squeeze on the upside. But that's where I think we could also kind of tag, maybe go over a little bit and then come right back down. So what do you want to show, Hans?
Yeah, probably if we get up into there, probably already we're starting to see a little bit of replenishing. People are looking at a 25 VIX saying, but if this is going to be a tough year, if we're not going to be making new highs, if we're going to have a little bit of a struggle here, I want to add some value via option harvesting, selling out those calls against positions that we have. It's not like we're not getting good, decent pricing on it. We're getting 25 VIX is historically quite high, not versus the realized movement that we saw recently, of course, because it's been doing a little bit of some serious reshuffling. But we can see, so for example, here's realized volatility. So it's starting to come down. This red line is basically, this is breakneck volatility. We're incorporating some of those massive moves that we haven't seen in many years. And so it's starting to come down a little bit. So at the moment, the idea is that some of the support we were talking about, the vol targeting, is just kind of, it needs this to come down a little bit more. It doesn't anticipate. It wants to see it right under its nose, just like Powell. He wants to see things happening. He wants data, good hard data, before he wants to do something. So that starts to come down, and then we start to see a little bit more of a bid there. So it's interesting. It's a good question, Samantha. How much of this is mechanical? Brent says he's not seeing the call buying that you would normally see if this is truly bullish. If people are starting to position for that upside, they haven't. We're seeing this, this is the systematic stuff. I don't think I have some of the skews here, but the upside is still quite inexpensive. So nobody's really making these big bets. bets, which I think is interesting to me because it creates an opportunity to play a little bit of a follow through to the upside. You don't have to marry it. You can just date it for a little bit and play that upside as long as the market is showing you a little bit of that resilience, which it has. We got almost no fireworks at all from Powell. So I think that bodes well. I think we really didn't see, oh, we did. In the end, we saw VIX pull back 1.2. So I think we're going to get your target. We're going to get down into the 20s. Yeah, maybe we even just slightly break that 20 level without any news coming out. Not much farther.
Now, we're not going to break that 20 unless we have big news coming out. By the way, does anyone know what Trump announced today that was supposed to be this amazing news? It wasn't during market hours. I think we're going to come down to the 20, long story short, and start to base and move higher. That's still my bet for June, July.
Yeah, I heard about that huge news that was supposed to come out. And
I don't remember if it hit. I guess I didn't care enough.
I don't think so. So what have we been doing? We've been doing I have an upside short call vertical, sort of what you would call a bear call spread, right? It's not a bull call spread that plays the upside. It's a bear call spread. You don't want things to go up. So I'm trying to capture a bit of premium on that call spread. It's starting to get threatened a little bit. It's the 575, 580 on the SPY. So on yesterday's pullback, I added a short downside vertical as well. So I've turned it into an iron condor, and today's move was exactly what I needed. There was the possibility that we would move and one or the other side would get threatened, but I was betting on a continuation of just the nothing burger, which is what we've had lately. So I'm looking for a little compression there. I'll probably make a little bit just on vol dropping, just a little bit there. That's that Vega exposure. And then we'll see if theta takes over for a little bit as we go into expiry week. One position that's doing very well is I have this upside broken wing butterfly in Meta. So I've been talking about this for weeks. This is one of my favorite ways to play high volatility markets. Play these, you buy a butterfly, but you break it up and have it positioned in a way that takes advantage of the upside. So this particular trade got in for 975, trading around 23. I took some off at 2045, I think it was. So I took 2/3 of the position off. Now I've just got 1/3 left, but it's right where I want it, right? So with these butterflies, I like to have a few of them on so that I can grab some quick money because they make money from that long delta, that short Vega, right? That's a way to combine the Greeks that are working for you in a market that's very high volatility. When stocks rally, implied volatility comes down. And this is the kind of position that can take advantage of that because the thorax of the butterfly, I think that's the middle, the thorax, comes in and the implied vol comes in there. So I'm going to hold on to this one and I'm going to see if maybe I can play it into this tent. So what happens is every day that goes by, this real-time line, this whatever this color is going to move up towards this tent. Now, if the stock is too strong, then it will move beyond that a little bit. And the numbers here aren't quite perfect, but I'll still make money to the upside. So that's one of the nice things about the broken wing is you ensure that you're going to make money to the upside. They cost more initially because you're transferring some of that upper risk to the front part of the trade to where you're putting the trade on. So it costs a little bit more, but does well through there. Also, what else have I got going on? I've been doing some Tesla credit spreads. That volatility is a little bit higher. So what we've seen is in many stocks really, we've seen option pricing come down from those crazy levels, but they're still sitting up there, right? So Tesla still trading around a 72 implied volatility. That's still fairly high. It does get lower, but I think there's a little bit more to be made on that Vega side, right? So that's on the compression of implied volatility. The VIX going from 25, 20 is Vega work for you when you're short options. That's where you're taking advantage of a compression of fear levels as those fear levels come down. So I think there's some more meat on the bone. So I think for me, the next week or so, heading into expiry, not too close to expiry, is going to be a little meat on the bone kind of strategy where it's trying to just scalp a little bit here and there. I'm not looking for big moves. I'm looking for perhaps a little bit of theta, a little bit of more volatility compression out there. I've got an IBIT position as well. I've got this coin income strategy on where I'm selectively doing covered calls against my IBIT. So I bought some at 50, 60, sold some calls, they expired, then it started to run through. And so So we went over this a little bit last time. When I sold my calls, the implied volatility was very high. And so I wanted to scalp that versus the underlying movement. When it started to break out, I looked at it and I said, I don't really want to sell calls here. The vols come in a little bit, option pricings come in a little bit, and this thing looks like it wants to go. So I let it go and then sold some more recently. Have to monitor it because I think if it gets through, Bitcoin's kind of hanging in there, isn't it? I think if it gets through, what do you think of Bitcoin actually, Samantha? That would be something perhaps people would want to hear about. It is acting better again and moving with gold a little bit. Just a
I
little
will
bit.
show you what I see, and that is, all right, nothing much in regards to this one. Let me just show you. So the days I think of accelerated moves in Bitcoin are limited. We had the Trump bump over here. This was very important. Actually, this formed a little inverse head and shoulder. I said it needed to get above this wedge, which basically goes back a year. And then it came out and it did a little retest, was very nice, pushed higher before the election, and then it did this hot fire flames, right? When it did this big advance, hopefully I'm showing the right chart. Yes. When it did this big advance, it went sideways for a good while until the most recent February, right, into April low. It also hit a 400 week, which is a big area of support, got right back above into this concrete, and there it sits. So for me, I'm not very excited about it. I think the momentum is going to wane and it's going to start to weaken with NASDAQ. It is just a liquidity proxy, or as Jeffrey says on our trading desk, an inflation absorber. So when we get this pullback in the markets, we will get it also with Bitcoin. The difference is the correlation, like you said, with gold. We had a sell-off in gold timed in October because the money went into Bitcoin. So they are correlated at macro. Again, Trump is the Bitcoin guy, right? I just read off that grift thing too, right? So his Trump coin. So the point is, that's all sentiment, but it is a really good liquidity tell when the market is bid, when the market goes sideways, when the market falls. It's just like any other proxy. So I don't see anything particularly bullish, big picture, although I know there are those who are very excited about it. They follow M2 money flow and they say we are just a few weeks away from a big outperformance run. I say it's going to be very hard falling dollar and spiking higher yields. So I have serious doubts that this is going to go hot fire flames like so many expect. Now, when it broke out, I will admit that I thought this would not just run into 110, but 130. So I actually had posted this as a swing trade going, this looks very good. If it can get above 67,000, it'll double. And it didn't quite double. It petered out right with the market. So long story short, it did make a great job of making it back above the 200 and see the trend line, but this momentum indicator isn't really solid and the market isn't really solid. So I see more distribution versus a run into and through all-time highs. I'm not as excited about it as most. I think its days of being a huge outperformer are, believe it or not, extremely limited.
That's an interesting viewpoint, because volatility is agreeing with you. Implied volatility. So if we look at this, I've talked about this a little bit over the last little while. If we look at implied volatility in MSTR, it is absolutely in the base. So even though it has had a nice little run up here, there's some talk that Saylor is going to continue to issue more debt, I think it is, to buy more Bitcoin. No surprise.
Yep.
Volatility is low. So those convertibles, when you buy the convertible, you're buying a little bit of optionality with it. So they tend to offset that in the market and sell the implied volatility that's in the market. Right now, there's not much implied volatility. So I'm curious as to where they price those and what the details are of those particular things. But right now, MSTR and IBIT as well. IBIT's not quite as low, but the whole coin complex isn't really pricing in any kind of worry, any kind of explosive potential. I think, you know what I want to take a look at? I want to take a look at the skew. I did look at it today, but I have forgotten. I look at too many things during the day. And let's take a look at the skew. I believe it has started to maybe normalize a bit, which is...
Chris says 130-ish usually. What does that mean, Chris, while he's looking for skew? You're talking about Bitcoin, I assume. Oh, the skew. He's talking about the skew.
Oh, the skew on it, yeah.
Is 130-ish normally. Okay, thank you.
Thank you. Yeah, so it's you know what? It's neither here nor there. It's sitting on the zero line. This would be where when we see that call skew, so anything below the zero that you see on here on this particular measure, anything below zero is call skew blowing out. So this is where we had MSTR go to 550 and the calls just went banana. Just as we saw in markets in general lately, we saw put skew blowout, right? So when everybody's in full panic mode, they are buying puts like there's no tomorrow, and that pushes up pricing to insane levels. And that's what happens trends to the upside with things like Bitcoin and coin and MSTR. So right now we've pushed up to calls being expensive, but now it's just sitting there. This is very flat. The skew is very flat. The volatility is very low. To me, that's interesting. I think that if you think there's going to be a move, I just took off a position on MSTR. I played it. I messed it up down here, but I ended up making 25% or something like that, 30% on the strangle because it just had a big move. So I was right. The vol was too cheap and it made the move. It did a little dipsy doodle first, which I should have taken advantage of, but it went up and I got out of the position. Now it was good. It was a good idea because we've seen that volatility come down. And what you have when you're long options, you have that Vega exposure. So remember earlier I talked about when you're short calls, when you're short puts, short verticals, strangles, straddles, whatever. When you're short options, you tend to be short Vega. So you benefit when implied volatility comes down, when the VIX is down. When you're long op, it's the opposite, right? You're going to benefit when volatility goes up. So I got out of long vol positions before we had this last little push down, but now I'm starting to take a close look at it again, thinking, okay, if we're going to have this move, if Bitcoin's just going to sit at 100 grand, then it's not going to work out. But if we do feel that we're in an environment where everything's got to do something, Bitcoin included, then that low option pricing looks very interesting. The funny thing is, it's actually been fairly low throughout the last month. Like we had little runs to the upside, but I've been pointing this out as being curiously low compared to many other things. We saw gold vol through the roof. We saw FX, credit, everything just go, all those vols just going bananas. Bitcoin was just kind of, don't care. So I think that's interesting. Now, another thing I've been doing, would love to know your thought. I do know some of your thoughts, but I'm sure other people would like to know. Google. So Google, I've been chit-chatting about how I think it's in trouble. I mentioned that last week. They're about 60% in search revenue, highest margin product they have. Of course, they have some other things. They have Gemini and Vertex or whatever it's called. They have some moonshot type things. They're not going to sit on their hands and just let ChatGPT take over search. So I'm sure they're going to have something up their sleeves at some point, but I think it is a very real threat. We saw Apple come out today and say we're considering using AI. So basically pushing people away from Chrome or some of the Google search effectively is how the market took it. So we saw this complete crushing. I bought some puts on Google the other day. I was telling members and folks that I'm really worried about this thing because
You timed it well. It's down 7.25% today on that Apple news. Boom, the kisser.
Exactly, right in the kisser. And I bought puts and it went against me. And I said, dang, I'm going to wait till it gets to 170 and I'm going to pick up a whole bunch more. And they pulled the rug out today on that news. And I think this is a very interesting moment for Google where if we start to see any fraying at the edges of search, this is something we talked about a year ago. This is not new news, but it is a fork in the road where I used the wrong expression. I think it's where the rubber hits the road. People are starting to use ChatGPT for their search, And I think that's a big deal. I think that is a very big deal. And I don't know how they're going to respond to it. But in the meantime, I have been buying put spreads, puts. I bought longer term puts. Now, keep in mind that I am along all kinds of stuff. So if the market goes against me, all right, I'm going to get hurt on these things. But I am picking the one mag that is cheap, but it is cheap because it's a trap. I love YouTube. I love some of the things they do, but I think one of the biggest pieces of their business is in a little bit of trouble. And I think that started, now it popped, it had put out good numbers. It popped to 168. I sold a whole bunch of stock that I owned and I took a small loss on some, but I am now starting to get a little bit bearish. So I'd love to know, I don't know if you've been giving it any thought at all, but I've been using more AI. So I feel it. It's real to me.
Okay. As it relates to Google, no, I can seriously, since you're so bearish about it, once we go into the next turn lower, it'll be one of my top contenders for weakness. But for right now, you know that it still hasn't taken out the lows of April 7th. They're not even close. So we've got some work to do there. Let me just answer a question here as it related to my VIX call of 20 for the past few weeks. It does not mean SPX is going to rise into 5,900 to 6,000. It means that SPX is likely correlated with 57.67. Not to be picky about a number, but that would be the upside VIX 20. So we would need to break that, 56.67 on the upside for market to really start, I think, having puts monetized, I should say covered, because the market has gone higher than those hedges are comfortable. We're actually already pretty there in Qs. I had given the Qs as specifically 487.20, but I can actually see it now a little higher, which I think this is on the outside, in other words. In other words, if we get this move here because Nvidia gets all the semis excited and we have another week of excitement, so in other words, grinding higher, I can see the Qs pushing up into 496, maybe an overshoot to 503, but I really think it gets hit. For right now, I think we're just below that 487 for the Qs, and this is not going to be a big mover yet. We have what's called an inside week. If anybody looks at weekly candles, you can see that we have a doji across the board. We've gone nowhere fast. Let's see if the news yesterday.
Are you showing that, Samantha? Are you showing something?
Nope, I'm not. I should have,
okay.
but I was then forgot to share it. Anyway,
Gotcha.
I gave the levels as it related to SPX. If VIX goes down into 20, that does not, I think, do anything more than that 50, what did I call it? 57, 67. Dollar yen. I will show the dollar yen because that is a really good point. I like this one as it relates to yen carry trade threatens. I get all excited about then positioning short. We're not there yet. I love to put this side by side. People think crazy, but this is the dollar yen, okay? And this is gold. And we typically do not have such a tight correlation, but man, this thing has been so tight this year. So sometimes that happens and I notice it. And so every single day I'm on this because I can notice that when the dollar yen is moving higher, gold is softening. But big picture, I think we need to break very specific level of dollar yen, 139.39, and we have to get and stay below it. I know I've mentioned this before and I'm picky about my levels. We did not hit it last time. We came just a hair below 140 and then we bounced. This is the dollar yen over here. Okay, sorry about that. Anyway, and so we need to break 139.39 for the yen to really get going, for the yen higher to put in that weakness that is typically shaking a lot of that concentration risk in Mag 7. In other words, we have already experienced this July into the August 5th low, and that was muscle memory. The market will remember. Right now, it's been very slow. In other words, the yen has been grinding higher since January 14th, and it has only recently pulled back a little bit. Here, let me show you no, I can't actually. I don't have the yen on this one. So the point is, I'm not looking for the next market weakness of size to come until the dollar yen breaks 139.39. That makes sense. So does that answer your question about, no, that was a dollar yen. Okay, now you want the 10-year? Okay, the 10-year. Let me show you a way of that I look at the 10-year that might be a little odd, but I'm going to do it anyway. All right, here is the 10-year T-note future. That's the bond, not the yield. This is the 2-year. And I got a little, you can see this kind of funky head and shoulders pattern, hasn't really broken lower. It's going sideways, and until we get some resolution on the debt ceiling, we're probably not going to get too much excitement, but I see yields moving higher. Right now we're neutral zone, but I see yields moving higher. Remember what happened with this dump in bonds on the 8th, which followed through very strongly. And then you know what happened. Trump came out and delayed the tariffs on the 9th because this was crashing and yields were moving higher. So I still see yields higher this year, waiting for this kind of these patterns to trigger lower. And this is going to be an ugly chart, but I'm going to show it anyway. And I do this because I've got fixed income clients that trade this yield curve. And this is the 10 and 2-year yield curve. And this is bearish steepening, not a bull steepening. So as this is moving higher, this is on a weekly, this is on a daily, and this is nightmarish over here. This is what happened on that fateful Tuesday before Trump came in with Besant on the 9th to talk down the market, to talk down yields, and basically the Qs had a 10% up day that afternoon. Remember that? At 1:15 it started. I was live. I was watching this. No,
wasn't it 12% on the NASDAQ?
I remember 10, but anyway, the point is it had a huge outperformance, and this is still chopping in a big sideways swath, but big picture, we still have this steepener going on, and it's a bear steepener. And I don't think bonds are going to stop falling until this indicator gets about plus 90 basis points. So I have my reasons for that, but that's basically it.
Does that worry stocks at some point, Samantha?
Oh, God, yes.
As we look ahead over the next week, I'm not sure I see a whole lot going into expiry, but as we look for, sometimes a good exercise is looking for the potential landmark, that sort of that one thing that can potentially hurt us and change the narrative. Right now, it's bid, the market's bid. That's that one thing? Is it higher rates?
It isn't one thing. It's jobless claims above 287,000, and not just one and done, but it stays above 287,000. But first we have to hit 287,000. That will absolutely bring forward recession risk in market pricing. Number two is this 10 and 2-year yield curve. I've been tracking this, right? So I'm like, okay, I know where this is going. I know where this is going, but it takes time. Is once it triggers above basically 65 basis points, it's going to start to move up a little faster into that 90, which is bonds selling off, all right? Yields spiking higher. We're not there yet. This could be weeks, but the point is that's another level. My dollar yen, that 139.39, it doesn't need to just tag it. It needs to break and stay below it. Very market bearish. So these are like levels versus just SPX, because honestly, market is going to follow. I know people don't believe me, but yields matter more. And with dollar crashing and yields moving higher and oil also falling, all those collateral trades are messed up. And then you have FX currency volatility like we had with the Taiwan dollar over the weekend, and you know that there are some imbalances. So that's what I'm tracking. And then I try and come up with, okay, what are the triggers that I'm looking for on a Thursday morning jobless claim print, not a Fed pushing out to December, will of course make the market realize you do not have an ally, right, in coming in to swoop in and protect you. They're going to wait as usual. They're always late, not once in a while, always late. So they're not going to be proactive, market get over it, move on. You're waiting and hoping that Besant and Trump will not fail. And so far they do not have a stunning report card. So we're really just, I have to find other triggers to, or I guess guardrails, as we're driving about on the corniches of France overlooking a cliff dive. There's really just these markers that I have. So dollar yen for me, jobless claims, much more important than SPX and Q levels, if truth be told. And of course, yields. So that's what I'm looking for. And I'm still bearish the dollar. Bearish the dollar for sure. Bearish oil for sure. And bullish yields. But yields haven't really gotten their mojo going yet.
Yeah, I think there's some things that kind of are encouraging. I see the VIX starting to relax a little. VVIX has been coming down. It's under 100 now. That's good. VIX 9-day versus VIX 9-day is finally under the VIX, right? So it's spent a great deal of time, which shows you a backwardation, a kind of inversion that shows you that there's a lot of fear out there. So we've taken a lot of the fear out of the gauges that we watch quite a bit. That doesn't mean we're done, right? So there's clearly a lot going on. So I think this is an opportunity for people to revisit hedges if they were
And
lucky
T
enough
is
to take.
asking about that. He's specifically asking you in Q&A, Hans, how do you structure multi-leg VIX option strategy for hedging, thinking ahead, vol event risk, and realized vol may ease post-VIX expiry, which is next week, and Nvidia earnings, which is the 28th, and month-end flows. But I really think July is where we start to get busy, and that's not usual. Usually July, August are deader than a doornail, like we've had the past few weeks, where volume has just been sucked out of the room. There's just been, I think we're going to have something happen in July. So that's my timing.
Yeah, it's very calm. And I think when I hear you talk about zooming out a little bit, I always love that because we can all get caught up in the noise and maybe even start forcing trades, right? You get into these, we've come down from an ATR of gigantic amounts compared to that we haven't seen in 15 years to things just normalizing to some extent, if you can call it 25 VIX normalizing. So we've normalized a little bit. So you have to adjust your trading, adjust your viewpoint to the market that's in front of you. Don't force things. And it's okay. Zoom out with Samantha. Just go, okay, we need to see some things develop here. And you'll see it. I tell people this all the time when they start to struggle a little. I say, listen, just sit on your hands for a bit, reduce your size, right? If you're trading X amount, cut it to half, cut it to a quarter, get that size down, start getting your confidence back, and then start pressing when things go in the right direction. It's amazing. One thing I always like to say is that P&Ls as traders can be tracked as well, right? There are trends. They move in trends. Playing poker goes in trends, like craps, everything. Everything works, has trend following embedded in it. So recognize when the trend changes, size down, sit on your hands and zoom out a little bit and go, okay, what's the next big thing here? We've just come off of a hell of a football game over the last month. Let's think of what we have to do to get prepared for the next one. For now, it's playing the compression and implied volatility. It's a little bit of theta, and it's starting to look for some hedges again. So if I look at the VIX term structure.
While you're getting that, I want to just answer this question real quick.
Sure.
In regard to the dollar yen that I put side by side with gold, this is dollar yen breaking 139.39 is bearish equities. It's bullish in the gold sector. This is still a kind of an inverse trade where gold right now, it gets flows, SPY rolls over, vice versa. Right now, gold is actually softening a little bit, and we had a nice little bid until escalation, India, Pakistan, and such. So if we were to, another reason that gold would fall is peace. So this is definitely, there are multiple reasons for playing gold long, but just the correlation I was talking about between dollar yen and SPX, even though I was showing dollar yen and gold, keep that in mind, because as gold is rising, SPX is also dampening. So you got some correlations there to watch for your own time frame, however, whatever your time frame is. And go ahead, Tom. Sorry about that.
Oh, no problem. So I was going to show if you look at, I've been mentioning some of the fear gauges that have come down a little bit and are somewhat encouraging. Some are not really there yet. So there's clearly still, even though don't let the market lack of volatility fool you, there's still some embedded worry. Now, some of it could be an echo from what we just went through, right? That's natural that things just don't completely go back to normal right away. But right now, we can see that the VIX term structure is still not that happy. It's flattish, but not really. I'd like to see it flat as flat, and this is not quite flat. So May is going to be coming off in a bit. So focus more on the June, July, August, and it's really not in a happy place at the moment. So what that means is you probably have a little bit of value in upside VIX structures. Some of the things that we talk about, the ETNs, the SVIXs, SVXYs, they're going to struggle in this kind of environment because it's not there. So some people get confused by those. They feel like, well, why aren't they doing better? They can make money quickly on a big curve drop, right? As vol comes down on a 1 day, 2 day event. But ultimately, they need the roll yield structure to work for them. And right now, they're not working. So short vol isn't really working. And it's because of this specific way that they're made. This is not VIX. This is the VIX futures and the way that they roll themselves to oblivion most of the time. Right now, it is a positive for long VIX products. And along the same lines, you could look at something like a VIX, put yourself out in July. June is maybe a little bit short. Maybe we don't get too much happening unless you start to see some reason, maybe some breakdown on the chart, some reason to think that we could have some follow through. Then positioning in something a little bit more near term is going to give you that bigger reaction, that gamma, right? You want to make that money quickly, and you might position in a June. But for now, with things drifting up, you want to use one of the only things that you can control in our world, which is give yourself enough time for something to play out. So I'd position, you could buy a 26, look, you can buy a July 26.50 for about $2. That's a pretty darn nice spread. And July is still very underwater. So you could put on some nice structures that don't cost a lot. And if we do get a little bit of shaky to the upside in the VIX again, those could pay quite nicely. And then to the downside, and the reason they pay well is that you can structure those is because you'll notice that the implied volatility rises, right? So think of this as the opposite of S&P downside puts. What happens? The at the monies trade at, say, a 20 implied volatility, and the way out of the money puts trade at a 30. It's a huge difference. 50% more implied volatility. That's that skew. VIX is the opposite, right? Because downside in S&P is upside in VIX. So you get those higher and higher implied volatility levels, which means you're getting 80 cents for this instead of what it should be worth, which is 15 cents, right? So you get this nice spread for less money, and that can help you play some of that downside. So
Excellent.
that's one way to do it. And then you could certainly go into something like the Qs, if that's where you think the weakness, if that's certainly where the weakness has been, perhaps in IWM, if you don't think those rate cuts are coming in the way that markets expect them to, that is not going to be good for IWM. I've been watching
I
that
think
chart.
you know my position on small cap.
Yeah, you have nailed that for a long time. And I
There's
have to
no
admit,
reason, no reason until we get a big sell-off. Small caps will outperform. Shocking, I know. Until then, zero in for me. None.
yeah.
Less than none.
We've had this nice little rally. We popped our head up above 200, but really, they really need the coast to be clear from a rate standpoint.
Yeah,
And
that's not happening anytime
that's not
soon.
happening.
No.
Yeah.
And I did not see the Medicare news, so I'm going to go look for that. But and I'm not quite sure the comment on rate of change, but that definitely matters, especially, by the way, when it comes seriously to these inflation prints that we're going to get a lot of mixed messages, because the supply chain impact that's coming this summer is not going to show up in the early prints that we have of PPI and CPI. This is all lagging data, just like jobless claims spiking higher is actually lagging data after severance pay runs out. So some of this has to be a little bit anecdotal, if you will. Surveys are a mess. Hard data is not. And hence the Fed can say we will be reactive, not proactive. But the market is losing more and more of its levers for policy intervention. So right now we've got those puts covering, which is the point that Spot Gamma was making. And that's really the reason for this support, speaking up trade deals. But until we actually get any of this, we really have a much higher possibility of basically buy the rumor, sell the news. So as we grind higher into the end of May, and then even if it's good news, we likely sell off. So as far as I'm concerned, we're going to have a really tough time getting and staying into the highs, assuming we get even up to 5,800. I think we're going to get a really hard time getting and breaking out into a new bull market. So that's it for now. That's our power hour. I hope we answered everyone's questions and really appreciate the time that you shared with us. I think we've got, everybody covered. All right. So long story short, you have got a week ahead of more headline risk and lots of technical trading on a shorter duration, because right now bulls are not charging. They're not charging, and bears are in hibernation until the next macro event trigger. So thank you so much for joining. We'll be back here at 4 o'clock, macro to micro ops power hour. Cheers. Thank you, Hans. Bye.
Thanks, Samantha. Bye-bye, everyone.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.